I'm Pratap here. We are at lesson 13, price direction. I'm sorry for the delay. This is a new topic which is under development. So that is the reason why I have taken a little longer for the preparation of this presentation, so that you will be in a position to understand these concepts in simple and easy way. And also understand this lesson is having dependency on the earlier lessons. In case, if you are attending this lesson directly without completing the earlier lessons, I request you visit our YouTube channel, NeoStock, and click on the home page and then scroll down to the playlist Supply Demand Zone Price Action course. And all the earlier lessons are available under this playlist, starting from lesson 1.1, 1.2 until the most recent lesson. Even all the upcoming lessons also will be placed under this playlist. Even I am providing the link to this playlist in this video description. By clicking the link, you can also directly access all these lessons. Even I am providing links to all these lessons at our Telegram channel. Even the link to the Telegram channel is also available in this YouTube video description. Now let us get into the lesson. So price direction, I am dividing into three categories, that is HTF direction, ITF direction and LTF direction. So first of all, what is a price direction? The movement of the prices between the demand and supply zones indicates the price direction. So you should understand currently where the price is moving. Is it moving from demand zone to the supply zone, or is it moving from supply zone to the demand zone? That is what you need to understand. And even I have categorized the price direction into 6 types. The first one is demand zone to supply zone, that is DZ to SZ. And the second one is supply zone to the demand zone, that is SZ to DZ. And the third one is demand zone to all-time high, that is DZ to ATH. And all-time high to demand zone, that is ATH to demand zone in short. And similarly, supply zone to all-time low, that is SZ to ATL. And all-time low to supply zone, that is ATL to SZ. See, there are all-time high and all-time low scenarios also there. When prices reach the all-time high, there is going to be some end point. So from there again, prices will go back. How they will go back? Now prices will be moving from all-time high to demand zone. See, there could be an all-time high demand zone. From that all-time high demand zone, again prices will be moving towards new all-time high or the existing all-time high. New all-time high means prices cross the existing all-time high and create a new all-time high. That is what I meant by. Same thing also happens in all-time low also. So that is the reason why we have divided into 6 categories. Out of these 6 categories, first 2 categories are very, very important, because most of the time we will be seeing demand zones and supply zones, but only few scenarios or special scenarios you will be seeing stocks at all-time high, and rare scenarios you will be seeing stocks at all-time low. So that's why it is a very important point to understand the price direction. How exactly the current price direction, that is how prices are flowing. How flowing means moving, how they are moving, the flow of the price. The primary price direction can be identified at the HTF, because you know previous classes we have discussed what is HTF, ITF and LTF, higher time frame HTF, intermediate time frame ITF and lower time frame LTF. I hope you all remember those scenarios. So in the HTF time frame, how prices are moving, what is the price movement at the HTF time frame? Is it moving from HTF demand zone to HTF supply zone? Or is it moving from HTF supply zone to HTF demand zone? Similarly, the other scenarios, all-time high or all-time low. So that kind of movement at the HTF time frame is called as primary price direction. You have to remember, primary price direction. So what is the use of identifying the primary price direction? It helps in confirming our trading decisions. What is your trading decision? That is long or short. Whether you want to go for a long or you want to go for a short. These are your trading decisions. So if you want to go for a long, is it allowed or is it not allowed? Or if you want to go for short, is it allowed or is it not allowed? That is what the confirmation. That confirmation you can take with the help of the primary price direction. How you will understand later. So it is called as HTF price direction. The price movement between HTF demand zone to HTF supply zone or vice versa. So that is called as HTF price direction. Of course, the special scenarios, all-time high, all-time low also you need to consider. So look into this chart. So this is a HTF chart. Let me say it is a monthly chart. Let me assume in our current example, monthly is the HTF, weekly is the ITF, and daily is the LTF. So with this example, I am going to explain this price direction. So this is a monthly chart for G Entertainment. The stock name is Z Entertainment Limited. So I have drawn a monthly demand zone and also a monthly supply zone. Now look into this chart. So currently what happened recently, not currently, recently what happened? Prices entered into the monthly demand zone. See, after the monthly demand zone, the price direction is changed. Now it is moving up towards the supply zone. Which supply zone? Monthly supply zone. Is it reached into the monthly supply zone? No, it is not yet reached. Maybe it may reach after 1 month or 2 months. That is a different story. But at present, what is the movement of the price direction on monthly time frame? That is what we are observing. So what is the price direction? Now you can easily tell. Because the prices are reached the monthly zone, now it is turned up. What is our belief in the supply and demand zone price action? Once it reaches a demand zone, the pending orders in the demand zone is having the ability to change the price direction because the pending orders move the prices again. Previously, before reaching, the prices are falling down. The moment prices reach the monthly zone, the pending orders in this monthly zone again trying to push the price up. That means the price direction is changed now. Now the earlier prices are going down, now prices are going up. So that's why now the current price direction is monthly demand zone to monthly supply zone. In short, demand zone to supply zone. That is the current price direction at HTF time frame. So HTF price direction is, in this example, HTF price direction is demand zone to supply zone. That is the current price direction. Okay, now after some time, what happened? From here, what happened? See, this is not the most recent price direction. This is the price direction few months back. Now, after this, what happened? The prices further moved up and reached the monthly supply zone. The moment prices reached the monthly supply zone, after that what's happening? The pending orders in the monthly supply zone again changed the price direction. Earlier the prices are moving up and reached the supply zone. Now the pending orders in the supply zone is pushing the prices down. Now the price direction is changed. Now what is the current price direction at this point of time? Now the price direction is monthly supply zone to monthly demand zone. In short, supply zone to demand zone. Earlier we have seen demand zone to supply zone. Now the price direction is changed to supply zone to the demand zone. This is what you should observe. In which time frame it is happening? This is happening on higher time frame, HTF. Okay, in this example, HTF is monthly. That is a different story. So, in HTF price direction is supply zone to demand zone at this point of time. And finally, this is the most recent scenario. So, in the most recent scenario, what is the price direction? Tell me, please tell me. You can pause the video and think for a while. So, what is the monthly price direction? Still, the monthly price direction is supply zone to the demand zone only. You should not see the movements in between, the intermediate movements, you should not bother about that. See, after reaching the monthly supply zone, prices haven't reached the either monthly demand zone or again without reaching monthly demand zone, again coming back to the monthly supply zone. None of these things happened. Because none of these things happened, clearly we can say the most recent price direction is monthly supply zone to monthly demand zone. That is supply zone to demand zone on HTF time frame. In between, up and downs will be there. Based on these up and downs, you cannot change the price direction. Once it reached the monthly supply zone and started moving down, the prices direction is changed to supply zone to demand zone. So this is the most important observation you have to make. So once they reach demand zone or supply zone, the price direction will be changed. That is what you should understand. This is the most important thing you should understand. So which zone recently it moved, the prices recently, the most recent is the monthly supply zone. So that's why from monthly supply zone, prices are moving to monthly demand zone. So this is about HTF price direction. HTF price direction is always the primary price direction. This is what you should understand. And next point, the intermediate price direction can be identified at ITF price direction, intermediate time frame. So that is called as intermediate price direction. This is also called as secondary price direction. But let us use the word intermediate price direction. So it helps in identifying possible pauses against the HTF price direction. Possible pauses. What is possible pause? See, from after reaching the supply zone, prices are moving down towards the demand zone. So prices reach the middle of the zone between demand and supply zone. After that, all of a sudden you can see a pause. Instead of prices going down, again they turn back and looks like they are moving towards the monthly supply zone once again. That is HTF supply zone again. Why all of a sudden there is a pause in the price direction and change the direction? That is because of the intermediate price direction. That is your ITF price direction. ITF price direction always helps in identifying the pauses against the primary price direction. That is HTF price direction. Always remember, it is always against the HTF price direction, the intermediate price direction. Okay, if intermediate price direction identifies the pauses against the HTF price direction, what is the advantage we get? All these things you will understand in the next lesson. But time being, observe the fundamental points. So it is called as ITF price direction. So far we have seen HTF price direction and ITF price direction. Let us look into an example. So look into this. ITF price directions. We already identified a monthly demand zone and a monthly supply zone. So currently, most recently, look into this chart. At this point of time, prices reached the monthly demand zone, that is your HTF demand zone, After that, the price direction is changed towards the up. But before moving up, there is some swings will be there, up and downs. So all of a sudden, what did you observe in the intermediate time frame, that is weekly time frame? We have seen a weekly demand zone and a weekly supply zone. That means it is a ITF demand zone and ITF supply zone. These ITF demand zone and ITF supply zone are causing a pause against the primary direction. What is your primary direction? Demand zone to supply zone. But at this point of time, what happened? Prices reached weekly supply zone and changed the price direction towards weekly supply zone to weekly demand zone. That monthly price direction, it is demand zone to supply zone, but at this point of time on weekly time frame, it is supply zone to the demand zone. Again at this point of time, supply zone to the demand zone. Again at this point of time, again it is supply zone to the demand zone. Now prices reached the demand zone. Which demand zone? Weekly demand zone. At present we are talking about ITF. So in the ITF direction, the prices reached the ITF demand zone. Now price direction is again changed to demand zone to the supply zone on weekly time frame, that is ITF time frame. So the most recent, now see the most recent on this chart. Most recent means not today. Whatever I am showing on the chart on that day. So the most recent on the chart is monthly direction is demand zone to supply zone. Weekly also demand zone to supply zone. But before that, we have seen supply zone to demand zone. Here supply zone to demand zone. Even we have seen supply zone to demand zone. But in the most recent on this chart, we have seen on weekly again demand zone to supply zone. That means the prices should reach the supply zone after some time. But still the monthly price direction remains demand zone to supply zone only at this point of time. Now what happened after some time? See, after reached the weekly demand zone, prices reached the weekly supply zone, but this time instead of changing the direction, they violated this monthly supply zone, again further moved up and finally reached the monthly supply zone. Now monthly supply zone, the price direction is changed now. Now what about weekly? Now we have identified a new weekly demand zones and new weekly supply zones. Now what price is supposed to do as per the primary price direction? Primary means HTF. As per the HTF, the prices are started moving down and they are supposed to reach monthly demand zone. When it will reach, we don't know, maybe after 2 months or 3 months, starting from this point, the prices may reach monthly demand zone. But in between what's happening, the intermediate time frame is making some pause in the price direction against to the monthly time frame. So that is what we learned about weekly price direction, that is ITF price direction. The point I told you, ITF price direction pauses the price direction against to the primary price direction, that is HTF price direction. Okay, now we identified a new weekly demand zones and new weekly supply zones. Now at this point of time, see what happened. Prices reached the weekly supply zone and then changed the price direction. So that means at this point of time, the price direction is supply zone to the demand zone on ITF time frame. In this example, weekly time frame. Now see here what happened. Now prices reached the demand zone. After that, the price direction is changed. So at this point of time, the price direction is from demand zone to the supply zone. But before that, again, some pauses will be there. Maybe that could be due to the lower time frame price direction. That is LTF. That is a different story that we will see later. So again, once again, it reached the demand zone. But whatever it is, again, it will reach second time or third time without reaching the supply zone. But still, the price direction is weekly demand zone to the weekly supply zone. How long this price direction will be continued? Until prices reaches to the weekly supply zone. See, now prices reached the weekly supply zone, changed the price direction. Now what is the price direction? Now supply zone to the demand zone. So before reaching weekly demand zone, maybe there could be multiple testing will be there. Or another possibility is also there. What is another possibility? This weekly supply zone will be violated and then again, once again, it will reach monthly supply zone. That possibility is also there. But even if it reach the monthly supply zone, still the monthly price direction is supply zone to the demand zone. Because already see the most recent what happened? Prices reached monthly supply zone, that is HTF supply zone. And now the price direction is changed to supply zone to the demand zone. That is HTF supply zone to HTF demand zone. So this price direction will be continued until prices reaches the monthly demand zone next time. That's why understanding price direction is very, very important. Okay, at this point of time, the most recent prices, at this point of time, the monthly price direction is supply zone to the demand zone, and also weekly price direction is supply zone to the demand zone. That means HTF price direction is supply zone to the demand zone, and the ITF price direction is also supply zone to the demand zone. So this is what you should understand. Hope you got clarity. So if anyone is having any questions, please put them in the comment section of this video. I will try to answer. Or if required, I will get an opportunity to answer your questions in the next video. But remember, it is not a complicated concept. It is a very simple concept. Maybe it is a new concept, first time you are learning. So you should understand, or you should concentrate, not understand, you should concentrate properly. If possible, try to repeat the video again. If there is any confusion because you are attending first time, again go back. Once again you listen the video. That way you get better clarity. Because I am explaining each and every point in detail. Sometimes a few points you might miss in the first time when you are listening. When you repeat second time, you get better clarity. If required, repeat third time. There is nothing harm in that. Okay, as I told you, at this point of time, the price direction on HTF is supply zone to the demand zone, and the price direction on ITF is also supply zone to the demand zone. The most important point you should understand, ITF price direction making pauses to the primary price direction. That is the point you have to understand. So that is what I told you. See here. It helps in identifying the possible pauses against the primary price direction. And also, it is also not only for against the price direction, even our trading decision also, because your monthly price direction is suggesting you. That means your HTF is suggesting you prices are moving from demand zone to the supply zone. You can take a long because prices are moving up. But all of a sudden what's happening? Intermediate price direction is against to the monthly price direction, and whatever the trading decision we are taking based on the HTF price direction, that decision is rejected by this particular, that is a ITF price direction. Why ITF price direction is rejecting our decision? Because in ITF price direction is against to the HTF price direction. That is the point, that is the main essence you need to understand. Monthly prices are moving up. So you may feel, okay, it is a safe decision to take long opportunities or long decisions. But the moment you look into the ITF is showing the price direction against the monthly direction. Monthly is saying demand zone to supply zone, but weekly is saying supply zone to the demand zone. When weekly prices are moving supply zone to the demand zone, what is happening in the intermediate price direction? It is prices are moving against the monthly price direction. So that is the reason why immediately you make yourself alert. Okay, it is not the right time to take long opportunities or long decisions. That way you don't take the trade. All these scenarios we will see in the next lesson in detail. Next one is, the third one is the entry price direction. The entry price direction is used for identifying our trading opportunities, where we need to take a trade, or in based on your monthly price direction, based on your weekly price direction. That means, let me avoid the words monthly and weekly. Let me use the words HTF and ITF. So based on your HTF price direction, based on your ITF direction, if both are in your favor, I'm using the word, if both are in your favor, then it will help you to take what kind of trade you need to take in the entry price direction. Entry means LTF, your lower time frame. So do I need to go for a long or do I need to go for a short? So currently entry price direction, what it is showing? Okay, the entry price direction, what it is currently describing. Does it help me to choose long opportunity or short opportunity? If that long opportunity, if it is giving you that long opportunity, is it supported by intermediate price direction or is it supported by HTF price direction? So that way you will be taking your decisions. All these points we will discuss in detail in the next lesson. So this it is called as LTF price direction. Look into this chart example. This is the LTF price direction. This is the LTF demand zone and this is the LTF supply zone. So currently prices moved into the supply zone. Now the pending orders in the supply zone are having the ability to change the direction towards the demand zone. That is also possible. There is another possibility is also there. This particular zone will be violated and further next time again further prices will be moving to intermediate supply zone. That possibility is also there. Okay, but do we need to take a short because prices reached the supply zone? Do we need to take a short? That decision you will be taking based on your intermediate price direction, based on your HTF price direction, and also based on the trend and also the location. Location means curve. That is high on curve, low on curve, equilibrium. So all these points together you will be taking the decision. How all these points together we will take the decision, that you will understand in the next concept. That's why to understand the next concept, you should clearly understand the price directions. Because we already learned trend, we already learned location, that is curve. Now the final chapter you are learning is price direction. All these three concepts, together we will be taking the decisions, trading decisions. Of course, there are other concepts all there. I'm talking about in this package. In this package means trend, location, and direction. All these three together, a single package. That is what I'm trying to say. And for that single package, I have given a name. That is what our next chapter. That you will see by end of this presentation. But now you understand that currently The LTF price direction is, at this point of time, the LTF price direction should be, because it already reached the supply zone, the pending orders should push the prices down. But are they having real capability to push the prices down or not? That is a different story that we will be able to understand in the future only. That is on the next trading day. But at this point of time, because prices are already reached the supply zone, this is the daily supply zone, that is the LTF time frame, and the pending orders should push the prices down. That's why see here we have seen some rejection. But we don't know the next trading day how the market is going to be. But at this point of time, it already reached the supply zone. Now the price direction should be changed to supply zone to the demand zone. It should be changed to supply zone to the demand zone. So that means what is our next trading opportunity? Your next trading opportunity is on this demand zone. When prices are going to reach this demand zone, can I plan my trade in this zone or not, in this demand zone or not? But if you want to plan a trade in the supply zone, before prices reaching into the supply zone, you should plan your trade. Not after prices reaching into this zone. Before reaching itself, you should plan your trade. Exactly the same way, before reaching this demand zone, you should plan your trade and you have to get ready. So now the price direction is changed. So next time prices will be reaching this demand zone. So before reaching this demand zone, you have to complete your trade plan. What is my entry? What is my stop loss? What is the risk in this zone? At which point I have to take my trade? Okay, once you plan the trade, is this trade should be accepted or not? How we have to accept? That is based on your ITF price direction, based on your HTF price direction, and also based on your ITF trend or HTF trend, and also based on your curve. That is location. Is it high on curve or low on curve, or is it in the equilibrium? All these points will be helping you in taking the decision. So that is the reason why LTF price direction is very, very important. So LTF price direction always helps you for planning your trades. This is the entry price direction, can be used for identifying the trade opportunities. So always understand the LTF price direction for planning your trade in advance. That means well before you will be planning and you will get ready. Once you plan, maybe after 2 days or 3 days, prices might be reaching that zone. So that you know whether to accept the trade or not well in advance. You should not plan after prices reaches into the zone. Trade plan should be always well before prices are reached into the zone. That is the important point you have to observe. So that is the reason why LTF price direction will help you. Currently my LTF price direction is helping me to take long decisions, whether I should take long decision or not, by considering, apart from this direction, by considering trend and location also. Why I am taking my long decision, why I am planning my long trades now, even before prices reaches into this, based on the LTF price direction. LTF price direction is telling me now prices are moving from LTF supply zone to LTF demand zone. Maybe it may take a few days time, prices are moving from here to here. There is also one more possibility is also there. The supply zone might be violated. That possibility is also there. But whatever it is, our concentration is not on the short trades now. Our concentration is based on the long trades. Is this long trade is a valid one? How it is valid one? Based on your other concepts like trend and location, apart from this HTF and ITF price direction. So how we need to combine all these concepts? Price direction, trend, location. Location means curve. How to combine all these concepts? That you will understand in the next lesson. That's why next lesson is very critical. Next lesson, mostly it will tell you our trade is going to be a successful trade or it is going to be a failed trade. If it is going to be a failed trade, how to avoid them. If it is going to be a successful trade, how to accept them. So that kind of clarity you will get in the next lesson. For that, understanding this price direction, the fundamental concepts is very, very important. And few advanced concepts related to the price direction, you will be learning in the next chapter. Okay, first of all, what is the advantages of a price direction? Previously, what did you learn when we are learning about the location? Location means curve. Previously, we learned at high on the curve, please concentrate on this point. At high on the curve, we should not take long trades because that is seller's location. In seller's location, we should not take long trades. That is what you learned previously. Similarly, you learned at low on the curve, we should not take short trades. Why we should not take short trades? Because low on the curve is buyer's location. In the buyer's location, we should not go for short trades. This is what you learned previously, right? And in that concept, price direction will give you better clarity. Really we should take the trades or really we have to avoid the trades. That clarity you will get based on the price direction. So that means that whatever the concept you learned previously, that concept is changing. It is not completely changing. Some extent it is changing. What is that some extent? That we will understand by looking into these advantages. It enables long opportunities at high on the curve. The price direction concept enables long opportunities. It is not confirming, it is enabling. Yes, we can take, provide other conditions also satisfies. That is what the meaning of enabling the opportunities. It is not confirming the opportunities. Please remember, there is a difference. So it enables long opportunities at high on the curve. Earlier what we learned, at high on the curve, we should not take any long trades. But now what we are learning, it enables long opportunities. Even prices are at high on the curve. Okay, when it will enable, when HTF direction is demand zone to the supply zone, prices are at high on the curve, but HTF price direction is demand zone to the supply zone. In that case, you can take. But one more condition is also there. And also, ITF price direction is demand zone to the supply zone. This is the important point. Your HTF direction is demand zone to supply zone. Your ITF direction is also demand zone to supply zone. In that case, it enables the long opportunities. Still remember, it is not confirming. Confirmation should be taken even after looking into the trend also. That's why next chapter is important. Next chapter, we are combining all these three concepts as a single package. Okay. So that means when HTF direction is demand zone to supply zone, ITF direction is also demand zone to supply zone. If both the conditions are satisfied, then we can plan long trades at high on the curve. If you don't know this price direction concept, simply we reject long opportunities at high on the curve. Because of this price direction concept, even we are able to find long opportunities at high on the curve. So this is one important advantage. Similarly, it enables short opportunities at low on the curve. Now it is very clear. When HTF price direction is supply zone to the demand zone, and also ITF price direction is also supply zone to the demand zone. If both these price directions are satisfied, then short opportunities are enabled. I am not saying confirmed. Why I am not saying confirmed? Because you should also consider trend also. If trend also supports, probably you will confirm your trade. Even then you won't confirm, there is one more concept, probability enhancers. So once you learn that, that is also called as odd enhancers. So once you learn that concept, odd enhancers, then you will be able to understand. And ITF direction enables long or short opportunities against the primary direction. That is also you will be learning. You won't take trades blindly based on primary price direction. Or you won't take trades based blindly take trades on ITF price direction. You will combine both HTF and ITF. When both HTF and ITF are in your favor, that means both are in the same direction. How to take the trades? When HTF is one direction, ITF is in the opposite direction. How to take the trades? This third point is talking about that. ITF direction enables long or short opportunities against the primary direction. That means your HTF direction is in one direction and ITF direction is in the other direction. Can we take the trades or not? That means the trade opportunity is enabled or not. That decision also you can take. That is the advantage of this price direction. So how all these advantages we should really understand in a practical way. So all those scenarios I will be explaining in the next chapter. And obviously, LTF direction helps your trade planning. Previously I told you, well before prices are reaching, you will be in a position to plan your trades. What kind of trade I should plan? Is it a long trade? If price direction is from supply zone to the demand zone, then you will plan the long trades well before. Similarly, if the price direction is demand zone to the supply zone, well before you will plan your short trade. So that way LTF direction will be helping you. So as per HTF direction, ITF direction, trend and location, you need to combine all these things. Finally, you will plan your short trades. So how to combine this HTF direction, ITF direction, trend, location, and finally what kind of trading decision we have to take, that is long or short. All those scenarios we will discuss in the next chapter, that is decision making table, chapter 14. Because this concept is under development, I need to finalize all the scenarios. So once I finalize, I'll be explaining all these scenarios. So that's why because it is currently in the final stage of finalizing this concept. Currently it is in the final stage. So that's why within few days, I will be releasing lesson 14. Soon after, we will complete the decision making table. So it's a very important lesson, lesson 14, because based on the concepts you are learning in lesson 14, you will be eliminating all unnecessary trades. First of all, you will say, okay, let us reject this trade. Let us remove this trade. Let us don't further analyze this trade. Because this decision making, the rules in the decision making table will tell you to reject the trades well before. Okay, decision making table also will tell you, okay, we can accept this trade. It doesn't mean we are confirming the trade. Few more concepts you will be learning later, like odd enhancers also will be useful to you confirming your trade. But this is the most important one. Decision making table is the most important trade. The advantages of decision making trade is all possible failures will be eliminated. All possible failure zones, the zones that are going to be failed, the maximum, I'm saying the maximum, not 100%, the maximum will be eliminated. And finally, the successful zones will be identified with this. But will they be successful? I cannot say all, but the probability will be, the success rate will be increased. See, here ultimately our goal is to identify the zones having higher success rate. That is the main goal of this demand and supply zone theory. Every demand zone or every supply zone may not be a successful zone. The other factors like trend, the other factors like location, that is curve, or the one currently you are learning, the price direction, they all should support. See, sometimes your zone is having pending orders. There is no doubt in that. But at present, your market is against the existing pending orders. That means all of a sudden demand is increased. The new demand is much more higher than the existing pending orders. What will happen? The demand will slowly consume all the pending orders, and after that, the remaining demand will violate that particular supply zone. So, how do you identify all these things? So, you will be able to identify with the help of this price direction, trend, curve, all these points will be helping to you. That's why how to combine all these concepts and take our decision is very important. And price direction is a new concept and a powerful concept. It is under the development, it is currently under the development. And now you are learning these concepts. So definitely your strengths will be your, the knowledge you are going to build will make you much superior compared to the others. That way you will be in a position to take better decisions. Here the goal of the NeoStock is not to tell you where to buy or where to sell. Here the goal of the NeoStock is to teach you in such a way you will be taking your decision where to buy and where to sell. Because we never tell you where to buy or where to sell for a specific stock. We never tell you that. You have to identify yourself. To identify yourself, what are the right skills you need? That is what NeoStock is helping in building your skills. So if you want to build good skills, you have to learn the concepts in depth. If you are not in a position to spend your time in learning the concepts properly, then you cannot expect you will be a successful trader. All the successful traders always build right skills, proper skills. There are so many skills are there in the market. Is every skill is going to helpful to you? No. The proper skill, the right skill is going to helpful. In that way, this price direction is a very powerful skill. Because it is a new concept and it is a powerful concept. The moment you understand this concept, definitely your knowledge will be improved and you will be a better person in finalizing a successful trades. Your ultimate goal is we need to identify a successful trade, not a failure trade. So that is the reason why I concentrate on lesson 13 and lesson 14. Lesson 14 I will be releasing soon after the decision making is ready. Definitely it will take few days time, and please wait patiently until I release lesson 14. Please don't put any pressure on me because it is a concept under development. In the software already I developed this price direction in our NeoStock software, but a few decision making concepts I am yet to finalize. And whatever I am going to finalize the concepts, the final concepts, they will be completed in next few days. Hope this information is useful to you. Whatever the questions you have related to the existing concept you learned, please ask me in the comment. Please put your questions in the comment box. And don't ask me any questions about combining price direction with the trend and curve, because that is the goal of our next chapter. After completing that chapter, those questions you can ask me. But currently understanding this price direction. See, the main goal of this price direction is one of the main goals, not the main. One of the main goals is identifying the pauses against the primary price direction, so that we can identify the safe trades. Because every long trade, when the market is in the up direction, is not a valid trade. The few times the intermediate level, the pauses in the price direction will make you fail in some of the trades. Those kind of trades we can identify the failure trades well ahead by making use of the concept price direction. So that's why it's a very important concept. I hope this information is useful to you. Let us all meet again in our next lesson, lesson 14, decision making table. Thank you.